Good afternoon. This is Tom Alexander. It is Saturday, March 2nd. This is the weekend update that I do each weekend. You can find all the weekend updates. They're free on the website, www.alexandertrading.com. Also, if you're finding value in this information, please like the video, please subscribe, please make comments. All of these things are part of the game that we have to play in the digital world to build an audience. So if you're finding value, help me build my audience by liking, commenting, and subscribing to the channel. Now, we are in a rather historic ramp to the upside in the U.S. stock indices, actually worldwide indices. People are coming out of the woodwork. All the gurus on Twitter are coming out of the woodwork with magic numbers telling you where the next top is going to be. I'm not in that game. I am coming to you from the perspective of a trader. I am interested in making money in the market. I don't have any magic to sell. And if I had any magic that enabled me to pick every top within a handle or two, I wouldn't sell it, and neither would anyone else. However, I can help you from the experience that I've had over the past 38 years of trading and maybe give you some insight into what we're doing from an auction market perspective. I analyze and trade markets based on auction market principles. And so that is my worldview, in case you're wondering. Now, we are in, as I said, and we all know this, a historic ramp. We are stretched. And I think everyone knows this. We are stretched to the upside in all time frames. However, we can get more stretched. Now, there are bullish reasons and there are bearish reasons for this market to continue higher or to form a short-term top. Now, I think in the intermediate term, we're going to see more volatility. And in the short term, we could still continue higher. We had the Russell in particular close above its December high. That's a very, very important level. So that itself would indicate we could see further gains next week. Let's take a look at the charts for just a minute. Now, I have something to share with you if you'll stay with me through this video. That I did a little study on what happened in election years, and we are in an election year. As a matter of fact, it's an election year not only in the U.S., but there are at least 64 other major countries that have significant national elections this year. So far, worldwide indices, and especially the U.S. indices, are pricing in perfection and the attitude of what could go wrong. Well, the indices are saying nothing. Find that hard to believe. But for now, let's just take a look at the levels that we see. So far off the October 2023 low, we have rallied a little over 25% in a remarkably short period of time. Now, what is more remarkable than the magnitude of the rally are the retracements that we've had so far, or should I say the lack thereof. We've had two retracements of 2+% from print high to print low. That's not close to close. That's print high to print low. We had a 5-day bear market here back at the beginning that began at the end of this year into early January of 2.36%, and we had a 10-hour bear market that lasted 2.5%. And those are the declines. Those are the magnitude of the declines that we've seen since the October low. That is what is extraordinary about this market. I've gone back decades and can find nothing similar to this. Now, especially in an election year, which I'll get to in just a minute. And remember, we are in an election year. Now, as far as levels are concerned, the levels are very, very simple from an auction market perspective. From an auction market perspective, you're using previous interaction between buyers and sellers to determine what are important levels, because those are the levels that the buyers and sellers themselves have determined is important. I don't use magic numbers of any sort, Gann, Elliott wave, any of this other stuff. I'm not, if that works for you, by all means, continue to use it. I don't use it. I haven't found a way to use it that is consistent or objective. Now, I can tell you, if you look on my screen here, you can see this level right here to the downside, 50.57, is an important level. If you look, what has this market been doing? Well, it's been making higher highs and higher lows. It's that simple. It's not over until that pattern is broken. Now, secondarily, Friday's low will be important in all the indices, and you just ratchet up from there. The previous day's extremes are always important in a bull trend or bear trend. We're in a bull trend, so certainly Friday's lows are important in the indices, okay? So this is the S&P. Let's take a look at our friend, the NDX. And of course, it is just going higher with panic speed. There is no quote unquote resistance above current levels in the SPX and the NDX. There's only downside. There are only downside objective levels to keep an eye on. The first level would be Friday's low again. All right, let's take a look at the Dow. Now the Dow, is lagging a little bit. It did not close at a new weekly all-time high, as did the SPX and the NDX. However, all it takes is a few hours in the cash session on Monday, and we'll be back in the new all-time high, print highs. And if we close above, much above where we closed on Friday, frankly, that'll be a new all-time high. So the immediate important level in the Dow is the high, the print high of the 23rd, and then you have these levels to the downside. By the way, all of these charts are found on the website. I'm going to show you that in just a minute. All right, let's take a look at the Russell. And the Russell is a little bit different animal. Now, if I wanted to make a bullish case for the market, this would be it. Why? Because the Russell has now taken out its December high. It had been lagging all the other indices and taking out that late December ramp high. It has done so now. It has closed above it. So where's the level above here? Well, I don't know. You have various pivot highs over here. Now this is way back a couple of years ago. So the farther back you go in time, the less credence I give to those levels. So I do think that short term here, the message from the Russell has to go on the bullish side of the ledger. Now, again, if all four of the indices close, cash indices close below Friday's low, I think that would be a signal that some top of relative significance is in place, but that's what it would take. Okay, now I want to show you a couple of things from a technical perspective, and then we're going to get into something I think is really interesting. Okay, here's the VIX and the SPX. Now, what you see, the VIX here, these are the closes, and you can see we're making VIX has come way in the past week or so. However, it's still closed on Friday above previous closes as this market has rallied. This is a divergence. Now, all it will take for the VIX to take out the low that it made back in December is another day or two of ramp higher in the SPX, and that will likely drop the VIX down below this level, and it will erase this non-confirmation. So we'll see, but it's certainly something to keep an eye on. And then breadth has been diverging for months, and it can diverge for months more. I have always talked about, I've used breadth for most of my 38 plus year trading career, and it is wonderfully helpful in bear trends, not so much in bull trends. We are certainly in a bull trend. Now, one thing that is interesting about breadth at the moment, I can't find a 2-week period with a more narrow range in breadth, meaning NYSE closing breadth to the downside, NYSE closing breadth to the upside is in a remarkably narrow 2-week range. I don't know what that means. I do think that you're going to see breadth expand dramatically or contract dramatically sooner rather than later. That would be my takeaway. I don't think it's a particular tell, except for dramatic expansion or contraction sooner rather than later. So that's something else we'll keep an eye on. Now, I want to take you over to, I want to show you the website. So if you want to get the weekend updates, go to alexandertrading.com. As you can see on my screen here, click, and this is free. Click on weekly update. And then here are the dates for each weekend report. This is this weekend's report. And in this weekend's report, I go through, I mentioned we're in an election year. Well, how has the S&P, the SPX, and I just looked at the SPX, but all the other indices will be relatively the same in terms of price action and pattern. How have other election years, and I started in 1980, I went 1980, 1984, 1988, et cetera. And I looked at the magnitude of the declines in each of those years, and I looked at the character, the personality of those particular years to see how vertical they were or were not. And it's really, really interesting. And again, I went through, it was 1980, this is 84, 88, et cetera. So if you want to see this entire series of election years beginning in 1980 through 2024, go to the website and all the information is there. You can download a PDF, et cetera. Hope you guys have found value in this. Again, please subscribe, like, comment. If you did, I'll speak with you soon.